And I would like to invite our next set of panelists for this for the next set of panelists on the panel discussion on account aggregator ecosystem, opening up new avenues for capital markets. So again, account aggregator as a initiative is quite talked upon. We recently celebrated that SEBI as well joined the account aggregator ecosystem itself. Again, that itself is going to enable access to all sorts of ecosystems, all sorts of financial products under one roof itself by retail markets. With that, we have a couple of we have interesting panelists joining us today, starting with Mr. Srinivas Jain, who is the executive director at SBI Mutual Fund. Mr. Srinivas has over 28 years of experience in financial services. Mr. Srinivas is currently the ED and chief of strategy for SBI Mutual Funds, and he had joined this organization in 2000, back in 2001. He's overall responsible for strategy, global business development, and super heads sustainability, digital technology, and initiatives for the organization. Mr. Srinivas is also known for his investment management industry knowledge as well and networking skills. He is an active contributor to many events in personal finance, sustainable investing, fintech, and indexing. Welcome to the forum, Mr. Srinivas. And
thank you very much. Happy to be here.
Thank you. With that, I'd like to introduce our next panelist, Mr. Anuj Kumar, who is the Managing Director of CAMS Limited. Mr. Anuj has over 3 decades of experience with premier organizations in the country, including Godrej Appliances, ICICI Group, IBM India, and currently he is with CAMS, India's premium service partner to the asset management industry. Joining CAMS as CEO in 2016, he has saw a rapid ascent and took charge as the president and CEO within a span of 2 years, and he is presently the managing director. Welcome to the forum, Mr. Anuj.
Hi, good morning, and very happy to be in this panel. Thank you.
Thank you. I would like to also welcome Mr. Deepak Shenoy, who is the founder and CEO of Capitalmind. Mr. Deepak is the CEO of, as I mentioned, is a CEO of Capitalmind, a SEBI registered portfolio manager with over 700 crores in AUM and over 2,000 crores in AUA. Mr. Deepak loves to write and decode complexity of finance, money, and investing. His viewpoints appear regularly in leading financial media and business television. He is also author of the book Money Wise. And again, I also love to read Mr. Deepak's view around finance and money on his couple of media articles that he already writes about. Welcome to the forum, Mr. Deepak.
Thank you very much, and very happy to be here.
Great. We also have Mr. Nithin Kamath, who is the founder and CEO of Zerodha. Mr. Nithin bootstrapped and founded Zerodha back in 2010 to overcome the hurdles he faced during his decade-long stint as a trader. With 9 million plus customers, Zerodha is the largest stockbroker in India today. A tech-first company now, Zerodha offers innovative trading and investing solutions that appeal to a wide range of audience in a bid to reach to those sections of the society that have stayed away from the capital market so far. Mr. Nithin also started Rain Matter, an R&D fintech incubator fund that has partnered with some of the best investment tech startups in India. More recently, Mr. Nithin also set up Rain Matter Climate Foundation as well, an Indian climate fund providing funding to startups and at grassroots organizations working on solutions to mitigate climate change. Outside of work, Mr. Nithin also enjoys playing guitar, poker, basketball, and swimming. Welcome to the forum, Mr. Nithin.
Yeah, thanks a lot for having me on this.
Great. With that, I would like to hand over the mic to Mr. Srinivas to take ahead with the panel discussion.
Yeah, thank you, and good morning to all of you. Thank you for that very kind introductions to all our panelists here. So let me start by thanking SEBI for coming up with this fantastic Manthan Ideathon initiative. And I managed to see quite a few sessions in the last few days, and it's big learning for me on various interesting initiatives that have been talked about. One such interesting initiative is the account aggregator system, and today's topic is about AI ecosystem, opening up new avenues of capital markets. Interestingly, last week we heard Nandan and Suresh Fireside chat about giving control to citizens, their data, and how that will unleash the new set of growth in the overall financial markets. Today, we plan to go a little more deep dive into this and talk to serious participants, savvy market participants. So we have one of the largest brokerages in India. We have a very large financial planner ecostructure with Deepak and his team. And of course, we have the backbone infrastructure that's being provided to the entire industry, which is Anuj from CAMP. So thank you very much again for joining this panel. I myself am part of this AA initiative as part of Samati Governance Council. So I'm happy to be talking more about this. Very quick primer on account aggregator. I know we've talked a lot about it, but this people continue to ask me, what is account aggregator? The inside joke is, I hope it's not alcohol anonymous as people talk about, but that's not. So here is what I wanted to give you a big primer on how revolutionary this whole concept is. So, we've been building various large initiatives as India. These initiatives have been coming up. The two big initiatives, which all of us have already seen, is building up of the layer of identity with Aadhaar, eKYC, and then eventually e-sign. We've been embarking on building digital identity for the entire country. Another big initiative that helped both capital markets and of course the market at whole was building the entire payment ecostructure with UPI, Aadhaar payment bridge, and AEPS. Right? So according to me, the next big thing is data empowerment. And data empowerment is going to come with three big key changes. One is the artifact around it, the DigiLocker system that we've built from data sharing point of view, and now the new baby or new the stuff is the account aggregator platform. Basically, the account aggregator platform facilitates the consent sharing of financial information in real time from building consent managers, the so-called AA, which is a bridge between the financial information providers like banks, mutual funds, insurance companies, and others, and financial information users. And they could be many, many users, fintechs, startups, even the banks and others who could use this. All doing this through a trusted architecture and through a properly user-consented setup. So this is the primer around the account aggregator system. Good news, again, we heard last week, SEBI chairman's eagerness to bring the account aggregator system to the capital markets. All the regulators are now on board, and we would now see interportability of data between all these regulated entities across insurance, banking, financial services, and capital market architecture. I'm going to pause here and start off with our panelists today. Maybe since Nithin was introduced last, it's a good idea to go first with Nithin. Just to get a sense of, Nithin, what do you think the AA, especially for the security market, and how would that make consumer more accessible to, or what we call as democratization of data access to consumers or investors in the capital market? So what are your initial thoughts on that?
Yeah, thanks, Srinivas. Firstly, I want to reiterate the importance of the India stack in our growth, not just our growth, entire ecosystem, because, if not for eKYC or, online sign up, or if not for UPI, which enabled us to actually, offer IPO offerings to our customers, I don't think our business would be even 1/10 of what we are today. So, it's just enabled someone like us who can be digitally, can be completely, digital, and then lower the cost and offer it to customers. Now the issue though, right, as a business, it is something that we've been talking. When we started the business in 2010, really what we were trying to solve for is, how do you make our customers do, customers do better with their money, right? As in, now we've offered great platforms, we made it easy. We've given access to all kinds of information, we've given access to education and everything. But does it really mean that people are doing better with their money is a question that we ask internally. And the answer is no. I mean, while the platforms have gotten slicker, you can do everything, but it doesn't really mean that people are doing better with the money. And the more we've thought about it, the more we've realized is, to be able to help people do better with the money, we have to advise in some form, right? Because none of us are really thought about finance in school and colleges. We pick up habits on the fly. We learn what our friends are doing, and most of the times it's really bad habits. So I think what India really needs is an advisory first ecosystem, because today it's not. It's today it's people do what they want to do. I mean, everyone's in their own social media bubbles. They get influenced by whoever they're following and do what they're doing. So now the problem with creating an advisory first ecosystem is to be able to get access to customer data, right? As in, our customer has a trading and demand account with us, so we get access to view some of his holdings with us, right? But we don't really know what is his financial status. I mean, does he have PF? I mean, does he have, what's his bank account balance? What is his, right? Because for you to be able to advise holistically, you'll have to get access to all of this information, right? And the problem in today's cluttered world is that people are very distracted, right? If you come on my platform and I ask you 20 questions to fill up, you're going to drop off in 2 minutes. I mean, it's not a scalable business. Of course, you can build it. You can have a relationship manager, go meet HNIs and do it. But can you digitally build a scaled up advisory model? At very low pricing point, it's almost impossible today because people won't stick through giving the data that you require to be able to offer decent advice. So, and this is something that we were hoping for a long time, that the capital markets get on it, right? Because the banks are are slowly and steadily, all of them are getting on board. I was just I mean, insurance is going to get on board. So so if say our customer comes on our platform and he consents for us to see the data, and we are able to collate all of this data, then I think we can digitally offer a decent advisory solution, right? And the way we have thought about this is that when it comes to money, people want to talk to someone before they transact. It isn't buying something on Zomato or Swiggy, right? As in where a push notification will do the trick, right? When it comes to money, and I mean, if it's not a 500 rupee SIP, but it's a sizable amount which makes a material difference, people want to talk to someone before they do anything, right? And if they're not able to talk to anyone, what they do is they go to inactivity. I mean, they just put the money in bank fixed deposits or gold or whatever. So I think there is an opportunity here to kind of create an advisory ecosystem which is advisor first, but advisor first who's only going to charge an advisory fee, so there's no conflict of interest. Now, if he charges only advisory fees, an advisor should be able to offer advice at scale levels. I mean, advisor should be able to manage 200, 300 customers at least, which can happen if he's leveraging technology, and he can leverage technology only once that whatever the platform has access to data, right? And so I think I'm very excited. I mean, I'm very excited because I think it can solve for the larger problem that I think all of us are trying to solve for, which is to help people do better with their money.
Yeah, it's interesting you say that, Nithin. I think beyond doing the high net worth market, I think bringing it to the masses with the technology scale, the infrastructure that you build, and do it at a scale that everybody gets benefit of the advice is a very interesting thought that you bring in. But I want to again go back to see how this can be done, right? So maybe Anuj, you may want to pitch in and say how you are the largest provider of data for the industry. You manage the data for the entire mutual fund, largely for the mutual fund industry. Operationally, how do you think, Anuj, this AI architecture will bring maybe better efficiency, especially in providers like us and users like Nithin and Deepak, in the industry? How do you think this will get rolled out, and what are the efficiency that will come out?
Sure, Srinivas. So let me just take you a bit into the past. I think the mutual fund industry, and I'm just focusing on a segment to illustrate what happened here, which did not happen in other places, was ahead of its times. So we created what is called a CAS, and then we created what is called an all RTA CAS. By the way, it should be called an all MF CAS, because if you had holdings across the board in 20 mutual funds, the records were actually stored across RTAs, across mutual funds. You could find a common key. You could find a common key like your PAN number or your email ID or a combination, and then come to a website and ask for the information. And this has been going on for over a decade now. I mean, unprecedented at that time. And while I don't want to use the platform to promote ourselves, but I must say the thinking was ahead of its times, and consumers did take advantage of it. That's where it began. Over a period of time, and as part of the sandbox itself, there was a next set of innovations. because in the first format, I as a consumer could get the cash, but it would only come to my email box. There was no way for me to get it to an advisor. And therefore, there were drop-offs at both levels. If an advisor had 1,000 customers, he went and urged all of them to pull the account statement. Maybe 500 pulled, the others did not. And of the 500 who pulled, 200 forwarded it to the advisor. And therefore, it was a suboptimal process, did not serve the full purpose. But a very elegant design, I must say. Through a set of APIs, we allowed the consumer, this has not been productized yet, but exists, was developed as part of the sandbox. The consumer could come to a fintech website, and now he could access or ask us that he wanted to access the same information across mutual funds. We would send OTPs out so that he could authenticate himself and say, now I don't want the statement to come to my bank account. I wanted to come to this website or this provider, and it would go there. So that was thinking ahead of its times, did very well. However, it is still not the whole 9 yards, which means you can't still do everything that you want to do. For example, you cannot give a perpetual consent. You can't give it for the next 60 months. You can't give it for the next 12 weeks. You got to initiate the process and close the process at every instance. And like Nithin said, I would completely agree. Attention spans are 30 seconds, 1 minute. And I don't want to blame the millennials. I think I behave the same myself. That if something takes perhaps more than a minute, I start getting queasy and think, do I really want to do it? So perpetual consents, I think, is a big axis which will kind of democratize the whole thing. And then this specific innovation was the caching was just restricted to mutual funds. But if you look at broader statementing, all of that across banks, insurance, so you can actually get a 360-degree view of my financial holdings. And if I want to, let's say, send it to Deepak because he's an advisor, that would be possible. If Deepak's firm or the firm could argue that, look, I would like this to be refreshed every week because, look, you seem to get dividend and interest income every third morning, and we've got to make a decision on how to deploy that money. And we are doing a suboptimal job. We could do all of that. So that's part one. Part two, if you just go a little away and go to lending, for example, today what happens in lending, despite all the digitization, a lot of the banks that I know have in their regional offices, like not dozens of people, but perhaps hundreds of people, taking bank statements, porting them into Excel, and then running their own algos. A lot of that has become industrialized. A part of that process still remains bespoke. Those printouts, those scanned images aren't secure, aren't safe. And we all know that there is a process because sometimes it comes from the sourcing agency. It is never consumer to the bank directly. There is intermediation involved, and there is only a level of security that you can impose there. But with the democratization of this consent-based architecture, all of that can go away over a period of time. It will take some time. It will take a cycle. But then you can deselect every other way of accessing that information, say it is completely secure. There is a full ironcladding around this architecture on what AAs can do, what TSPs can do, and what the FIU can do. The purging methodology, the storing methodology are all stated. The security testing is completely well defined. And then I think a third layer of innovation may exist where a lender may say that, look, if you let me monitor you for the next 7 years for which you're taking a loan, I may incentivize you. I may say that I offer discounted rates to you because you're allowing me that access. Because today that is frozen in time. You get to the consumer today. And if you talk to lenders, I mean, digital and non-digital both, their version is that once a consumer has got the money in the bank, he's not really motivated to pick up your phone call. And he's not going to talk to you about whether he changed residence or changed jobs or any of those things. So a lot of intelligence will come into the overall system, both capital markets and non-capital markets. And therefore, starting from the baby steps of the cash, I think this will go now through many, many layers of innovation and make sure that safe, secure data with complete accountability at every level and every participant of this ecosystem will get established. And therefore, it looks completely revolutionary to me. And that's the reason we are very excited.
Yeah, thanks, Anuj. I think it's interesting to see how we are evolving from the age where we used to scrap data, take password from customers to build that profile of investors to now a consented architecture layer. And it's very interesting to hear about the 3 layers of innovation that you talked about. Deepak, now to you. I remember talking to you, I think recently, and you said AI could be something like the GPS for the industry. It just got me thinking and said, I remember you telling me, we don't know what all innovations can come, but a whole lot can come once the GPS is kind of put in place. And, today we are talking about risk profiling, 360-degree data. From your perspective, what are the stuff that for you as a practitioner and also for the industry that the AI architecture would kind of help?
Thanks, Srini. I think it's quite an interesting thing, because if you look at what an account aggregator system does, it allows you to give what I like to call revocable consent, which means I can tell you that you can access my data, and then I can stop you from accessing it whenever I want. A very powerful tool. And if I looked at, for instance, in mobile phones were typically used for calling people. Once they added the GPS functionality, everybody could track where they were. They could track where somebody else is. Look at the innovations that came on top of it. The Uber and Ola concept was you could book a cab, find out when the cab is coming to you, find out where you're going in the cab, how long it will take, distances, times. Apart from that, now on a WhatsApp, you can ask someone to share their live location with you. So if you're going to meet them, you can find out, where you are. If you're not geographically in exactly the same place, you can find a way to meet each other. These are innovations perhaps the person who designed the GPS didn't think about when they thought about it. So today, I think an account aggregator system is simply saying, listen, I'll give you an ability to share your financial data, profile, balances, transactions with somebody else, or with somebody else for a short period of time, for a continuous period of time, a snapshot every 12, 6 months, 1 week, or whatever it is. This ability now allows people to innovate on top. Now, three ways that I can think of, which are very obvious to me right now. One is the advisory ecosystem, like both Nithin and Anuj said. The idea of the problem is that people, and we advise people, we're a PMS, so typically HNIs, come to us, and we're a fiduciary, we have a fiduciary responsibility. So we are not just selling our products, we have to do the best in the interest of the customer. Sometimes the customer doesn't even know what they own, where and how much, and in which areas. So we can appropriately advise them what kind of exposure they should be taking, debt and equity and so on. So we ask from them, give us your CAM statement. In the CAM statement, we might discover that they had invested in a different email address. Unfortunately, previous practices caused certain advisors to give their own email ID instead of the customer's email ID. So it was a little bit jumbled up, because sometimes it isn't, the statements that you get from a CAMs today were linked by email ID and not by PAN. So we would then have to kind of get data from NSDL or other places and try to bring this together. This is such a mammoth exercise. We have given up on it for the most part, because we can't use technology, and none of the formats are easily parsable. Of course, CAMS is, I must say, thanks to Anuj and his team, that they've created a format that is parsable, but most others are not. So bank statements, PDFs, they just send you files which are unreadable. So the advisory system would be phenomenal if you were to just say, listen, tell me what your data is electronically. I could write a program that can then get this data after consent from you, collate this data together and show you a one view of where you are currently. The advisory ecosystem can sit on top of that and in fact use technology itself to provide some basic features saying, listen, you have no equity exposure at all. You have no debt exposure at all. You have exposure only to this kind of, maybe something that's extremely risky and that doesn't seem to fit any other of the financial profile questions we asked you. So maybe you need something more to balance this out. And this can only happen if a lot of financial players share their data together. So it can't be like only two mutual funds share their data. It has to be with all the mutual funds. It has to be all the brokers or all the NSDL and CDSL as depositories share their data. It may be required eventually of all insurance companies to share their data, of banks to share their data, of even the PFRDA and the EPFO to share data. Once you have this ecosystem, there is so much that you can do in the advisory ecosystem, not just from advice, and that is one layer. There's also the transaction monitoring and reporting that can happen. I'll talk about transaction reporting in the sense if I advise a person, I cannot do that transaction for him. The advisory ecosystem is only for advice because people have misused advice as a license to be able to say, I'll transact on your behalf. Usually it has to be advice is taken, and transaction can actually be done separately. But then how does the advisor know that you have acted on the information in the way that you have been requested to or advised to ask on it? This reporting again is a pain, because if the customer has to upload that data again, they're like, oh my God, it's just too much work. The life cycle, people don't want to do work. Even I don't want to do work. So I don't want to advise myself if I have to do all this work. So to be fair, I think this will change not only advice, but post-advice monitoring of a person's financial health also. This also is very useful, for instance, for filing taxes. You can give your transaction statements to your CEO. You don't want them to see your statements all the year long. It's a one-time snapshot at the end of the year. Give my transaction statements for an access that can be like, this is it, and you don't get access to this. So I don't have to share my login ID and passwords. I can say, can you fetch it electronically? I've given you access for the next 1 hour, and they should be able to take that and do whatever else they want with it. The last bit is, of course, the thing that I think Zerodha has done really well, the concept of nudges. And I think nudges should be part of a financial ecosystem as a whole, not just in one area. If there are things that you need to know, there is technology today that can monitor everything, whether it is if a company is announcing results, to whether some company has defaulted somewhere else, a bond has defaulted or something like that. The idea that a monitoring ecosystem can look at a portfolio and tell you whether there are things that you need to act on, just because you are participating in some product which is perhaps which may not give you that information by itself for whatever reason. This third-party monitoring is actually a very, very interesting concept. I think both organizations and individuals can use this. So as an advisor, I would like to say, if something happens in the financial world, I need to be able to tell customers who have those particular products that this is what is happening. For instance, today you can no longer invest in mutual funds that invest out of the country. Now, each mutual fund has currently sent advisories to all its customers saying, oh, well, you can't, your SIPs are stopped, or, things like that. This is an advisor's job also. I could proactively now find out if I have 1,000 customers or 5,000 customers, automatically move that communication over, and then also tell them when they can restart whenever RBI and SEBI give their permission to do so, that it is time to, start things back again. I think all of this stuff is made super possible. And this is just the initial innovations. Once this comes, earlier your data was your product, right? So people built complicated startup platforms, but they own the data. They owned whatever data that you created, your transactions, your things like that. But now that data is no longer a product that is a moat, because anybody can get access to it by using the account aggregator ecosystem, I think we can go much beyond and use this data for purposes that can really be beneficial, from tiny collateralized loans. So maybe crypto has shown us that way. I don't like crypto as a concept, but one of the things they've done is they said instant loans that can be, quickly done with collateral as backing. Now, all the mutual funds you have, any bank can lend to it up to 20 lakhs, I think. The problem with that is that you have currently, it's a very high cost, high turnaround time system. Even though people like Anuj and his team at CAMS, they actually set up a whole platform that can be done electronically completely. No bank has currently used this or made it very quickly possible at a very low cost for people to borrow against their funds for a long time. There's a good reason for it. If your funds have an exit load, or you have a very high tax incidence for actually selling your money, selling your mutual funds and generating cash, why not just take a short-term loan against it for like 15 days and then return the money, and then you don't have to pay all that tax that happens, So all of these things are made possible by an account aggregator ecosystem. It's not that it's not possible today, but it's the same as, I could tell you without a GPS, why don't you just call me and tell me where you are? I will come to you. That is still possible. It was always possible, but now it's just, hey, share your location, I'll come there. It's just that much easier. I think account aggregator should enable all of these and more.
Yeah, that's fantastic. There's so many things you packed in that point. So many interesting stuff that you said. A couple of things that you said was on, which kind of struck the chord there was, today BNPL is a big thing, but you can probably use security-backed short-term lending with an account aggregator platform. I think that's a very interesting use case that you talked about. You also talked about crypto investors, which actually brings me to an interesting conversation. I know crypto investors not this there for ease of doing it, but there is most of them have an expectation of significant up gains in very short period of time. Nithin, that brings to the point saying, the millennials are excited about this frictionless, quick, stuff that they do, and that's probably one of the reasons beyond returns that they go to the crypto market. What do you think? I know your platform has done something amazing in terms of speed, in nudges, all that, insightful stuff that you do. What do you think the account aggregator platform will do for your platform or otherwise to attract more millennials and others when it comes to frictionless, ease of use transactions?
Right. Yeah. No. Firstly, I think most people go to crypto for for greed and very few for everything else. So yeah. No. I think the thing is, what is missing in India, right, is that we have a lot of people who have interest, but we also majority of them don't know what to do, right? Because I think there's something that we've tried very hard for a long time, which is to see if we can educate people, and through Varsity, which is probably amongst the top education initiatives on capital markets in the world today. But like I said earlier, right, Varsity is competing at TikTok and Netflix, whatever, right? And it's very tough to, people don't have attention spans, right? They don't last through long. But on the other side, what we've realized with nudges, right? How the nudges play out is when a customer of ours tries to place an order, what we've realized is that at that point of time, we have is undivided attention. It's a few seconds, right? I mean, you've added a stock on your market watch, you press the buy button, and then you confirm, right? For those 2 or 3 seconds, we have undivided attention, right? And what we've realized is that we can actually educate people a lot more in those 2-3 seconds than what we can really educate them through tons of content on Varsity or long format, videos or, emails and etc. And that's really what, is the most exciting about, what we're doing at Nudges, which is slowly and steadily. I mean, see, at the end of the day, to do okay with money, you need to follow 4 or 5 very basic rules, right? As in terms of, diversifying, or in terms of not betting your house on one thing and stuff like that, right? So now the other way to tackle this problem, right? Now the problem with nudges is that we can only nudge when he comes to us for transactions, right? Now, if you do, what Deepak was saying, right? This whole push notification, emails, calling a customer, people have no interest. Now, I mean, our open rates on our email is like 3%. I mean, that's open rates. I mean, that's coming from a customer who has a relationship with us, right? I mean, SMS is even less than that, right? I mean, saying if open is that much, I'm guessing people who actually read through what we are sending is maybe less than 1%, So, and so how do you nudge a customer who isn't, that's a problem, right? I think that's a problem for Deepak. It's a problem for us. I mean, it's a much larger problem for us because we don't have relationship directly as such, right? As in, we rely on the platform. So, so the way I'm thinking about this is, right, is that if we can somehow enable a professional advisory ecosystem in this country, think of, I don't know if it's the right example, but think of as a mat of advisors, in the sense, advisors who are on the other side who are leveraging tech. They can't sell anything they want, they can only sell what the platform allows them to sell, but they're very well educated on these things. So can a Zerodha or a Capitalmind go out and educate a few 10,000 advisors, kill them, ensure there is no conflict on the platform where they can sell anything they want, right? They can only sell what the platform allows them to sell. Then will these guys end up educating the customers is a question, right? Today, personally, I think in India, historically, the person selling you the financial product has had a conflict of interest, right? So he had an incentive to confuse you versus educate you, right? Because the more he confused you, the higher the chances of him being able to sell whatever he wants, right? So we need to change that dynamics, right? As in, you want that person who's selling the product or advising that the front line to be actually explaining why he's doing what he's doing, right? It's not possible to educate every customer, right? But assume say 10,000 advisors are reaching out to 1 million customers, and out of this million, say 10,000 customers now become professional because of this advisory ecosystem. Now you enable 10,000, power users of sorts who are gonna go start educating, right? As in, and that's, so eventually this country needs, most of India needs to be backing Indian entrepreneurs, right? I mean, like, we need India to be taking more risk. We need, we can't just be relying on foreign money or allow foreigners to generate all the wealth out of this country, right? As in, and all of that can really happen when India's risk appetite goes up, and it can't go up only because it's a bull market, right? Because in India, the problem is every time there is, like a large bull market, retail comes in and then they go away for many years, right? As in, it's just, it can't happen like that. So, and I think, like Deepak said, it's like a GPS. So I think there'll be a lot of second, third order kind of effects of allowing a tech platform like this, allowing a technology like this to exist, because, there are, over the last 2 or 3 weeks, from the time that tweet was shared saying, SEBI is going to do this AA thing, I've been trying to enable this idea, seed this idea among so many startups saying, dude, there is this opportunity now. So I think, over the next 1-2 years, I think there'll be very cool startups building stuff which will help this country in the long run.
Yeah, that's fantastic. Last time I was talking to you, you talked about another interesting use case of a PMLA data where, you can use, maybe you want to explain that quickly on what's that use case is. And then we go to Anuj on the next question.
Yeah, no, see, the thing is today, as part of PMLA, we are supposed to, kind of spot transactions which are not in sync with what the customer profile is. But the problem today is we have to decide on that customer profile based on what the customer declares, right? So customer comes to us, he says, my income is 3 to 5 lakhs. My experience is this and this, right? As in, so we have no way to authenticate what the customer is saying is real or not, right? And then, all our PMLA alerts are really based on the data that the customer entered. If a customer has malified intent, so there is really no way for us to track this as well as possible. But I think it's going to be tricky to get every customer give us account aggregator, like access to his data while onboarding. But assuming it became mandatory at some point in the future, right? Saying that the broker is mandatorily required to kind of validate a bunch of things that the customer is saying, and here is a tech platform to do it. I mean, if today, if the regulation comes in, broker has to collect net worth of a customer, for example, right, from a chartered accountant, it's done, right? As in, if today 1 million customers are onboarding, tomorrow it'll be 1,000, right? As in, so because no one's going to give chartered accountant net worth certificate, but assuming you can somehow determine a net worth using this account aggregator, and it's just a 1 OTP click away, so you can continue onboarding the same number of customers without really having, without really creating a drop in user experience of sorts. And then, platforms like us, intermediaries like us, can then do a better job at PMLA. So in the sense, you can do a better job when we know there's something off. We've found these cases, right? As in, we found cases where, a customer who hasn't traded ever suddenly one day wakes up and starts doing F&O trading, right? As in, there's something off, right? But it's still very tough to track it because, potentially he could still start trading F&O, right? But there are times where someone else gives him money and trades F&O on his behalf, right? As in, so, if person who's earning 10,000 rupees is doing 5 crores of F&O trading, it is, but the thing is, we don't know if he's earning 10,000 rupees, so we will probably get to start knowing this once we have access to more data. So yeah, so it's a really large use case of sorts, for intermediaries, and you can then put responsibilities on the intermediaries to do a better job of PMLAs.
No, it's fantastic. I think there's so many use cases, and we are just at the early stage. Anuj, quick one before we go on for Q&A, because we just have 7 minutes. I know you are also a data provider, and at some level you are an account aggregator too. One of the questions that keeps people asking is, data is your double-edged sword. It can be misused significantly if you openly available. Account aggregators are technically data blind. Maybe you want to explain how the data protection part of it works there in terms of making sure that the data is kind of not misused, and with the right consent only these things happens, and how are you enabling that on your platform?
Yeah, sure. So if you think of the entire architecture, I think it's been thought through very carefully. Potential points of leakage, potential points of misuse, third-party certifications, are all in place. In fact, if you see the architecture and the API dictionary, you will find that every data format and the way it will be displayed, if a bank account has to be masked, it will be masked in an industrialized way. You can only see the first 4 and the last 4 characters. Account aggregators are data blind, and that means that they will never hold data, nor will they process, augment, enrich. They will not do any of those things. The way data will get pulled and the way the data will get purged is all completely well defined. The responsibilities of FIPs are pretty clear because they're signing up. The responsibilities of FIUs are also very clear because they are signing up. And then the consent architecture is the most powerful thing here, because the individual, when he is setting himself up, will allow, basis his consent and a unique OTP, to add his first bank account and then the second and the third and the fourth. And similarly for his securities accounts, similarly for depository balances, insurance, all of that. Single architecture, single set of rules, encryption standards are completely well defined. And because it's a licensed business right now, and therefore a finite number of people are allowed to access, it's almost sure that democratization will happen, but will happen within the boundaries of licensing, testing, encryption, certification, and all of that. So that's how this really works. I think the only thing to think about is that over a period of time, Indian consumers will have to learn how this entire thing is transferring power into somebody else's hands. When you see, for example, some of this new age lending, what we see in the market is that if I, as an individual, have decided to borrow 50,000 rupees, I actually go and download 5 or 6 of these apps within an hour. If some of them say that, look, Anuj, I would like to look at your phone and continue tracking your phone and SMS inbox, I just click it there because the 50,000 is so important. I don't really care whether they're looking at my SMS inbox. They may look at it for life. So I think that education part, which happens in every industry, Srinivas, which is to gradually elevate the standard of thinking and awareness of the individual, I think will remain a task for the industry to accomplish. But other than that, if you leave that aside and see architecturally, how does this work, I think there is every safeguard and every element of ironcladding available and present so that it works well.
No, I think it's fantastic that you explained this, because this is a question that's also been asked quite a lot in our Q&A, and it's good that you were able to give some assurance around how this is being built. And Deepak, maybe last question before, if you have time for other questions from the panel, from the audience. Clearly, a lot of use case was discussed today. What do you think adoption of this going to be, and how quickly can we all get together to make the adoption happen quickly, so that some of these use cases that we talked about can come into play? What does it take for us to make that happen?
I think 2 things, Srini. I think firstly, enabling of the ecosystem from the provider ecosystem itself, which is currently being discussed as everybody has to share their data, and we'll have to see which all players will be able to get their act together fast. I think most of the data sitting with the RTAs and the depositories should be up fairly easily, but people like us who are PMS, portfolio managers, we also have data and we want to be able to provide them into the aggregator ecosystem, and we may have a slightly different period of coming on board. But it's not just the provisioning of data or the initial consumption. There will be abuse. There will be a lot of players who take this data and try to abuse it, take permanent consent, try to create mechanisms for to not allow you to revoke this consent and so on. The system should provide for penalties against such behavior. That is when people get more confident that their data is safe. That if you violate the integrity or the secrecy of this data, that you will get punished, is how, whether the regulators do it or some other part of the framework does it. It provides the feeling that, okay, well, I can trust somebody with the account aggregator system with this data. It may take some time. I'm hoping it's really fast. To be honest, it's a technology game. So once it's developed, I think, you should be able to get something on board very, very quickly within 6 months, 8 months, a year. You should have the platform being used. but I feel it will go through its natural cycle. So give it 3-4 years. I don't think any system matures before 3-4 years in India. Look at GST. It took from 2017 to now to come to a shape where the government has started to reap its benefits, and so have people who are registered with the GST ecosystem. Same thing, I think, for here. It'll take that teething troubles and all that, but you have to make a start. Better to make a start today than to wait for tomorrow.
It's fantastic. I think the reason I talked about the play out is that obviously people are waiting to see what use cases can come up, and these use cases will just keep coming up as people start adopting the platform. I don't think we have any time for questions. Many of the questions that I see have been answered, but I'd like to quickly summarize. And if we still have a minute or so, I can ask the host if you have time to move. But clearly, I think a lot was discussed today. The entire ecostructure itself, the account aggregator ecostructure, and how it's going to benefit. I heard some very interesting thoughts around, while we've provided a lot of infrastructure in the past, whether people are using this to better with their money, what Nithin talked about. Is there an advisor-first ecosystem that's there that we need to play? Anuj really dwelled upon quite a lot on the 3 layers of innovations that can come up out of that, and lots of beyond the capital market, data also that we discussed. Deepak, I think you had a bunch of ideas that was from consent architecture to transition reporting and things like that, which is very, very interesting. And then I love this idea of Zomato of advisors, which Nithin kind of brought in. Overall, I think this is a fantastic conversation. Thank you all for bringing in very interesting insights on how the future of account aggregator platform will play out, especially for the capital market industry. And I'm sure, like Deepak said, in 3 years, like GST, will start reaping this in a significant way. I also encourage more startups, fintechs, and other platform providers to come learn more about it and start innovating on top of it. Thank you very much. Over to you, to the host.
Thank you so much.
Thanks very much.
Thank you so much. Thank you to all the panelists for joining us today. And those were some quite interesting insights from a data architecture standpoint to privacy of data towards consent management of data as well. With that, what I'll quickly do is I'll quickly share my screen and let other audience members quickly mark the attendance for this session so that they can we'll generate digital certificates for them to for participating in this masterclass. You can either scan the QR code or else click the link in the description window. And those were like quite interesting points around, as I mentioned by our previous panelists. With that, without further ado, what I'll do is I'll quickly move ahead with our next session, which is on account aggregator tech rails. And again, before I move ahead with the next session, the previous conversation point itself gave so much areas in terms of, from an application standpoint itself, in terms of how can you give out your ideas for this Manthan Ideathon program altogether, in terms of how do you collate all the data, how does the consent management systems can work, so across all asset class industries. So in case if any applicants has any data, have any ideas around innovation within capital markets using account aggregator frameworks as well, those are one of the interesting areas where we would love to see your ideas.